What if I told you that the Coinbase everyone talks about, well, it isn't the real Coinbase? Seriously, most of the analysis out there is still stuck in the past. So today, we're going to go on a deep dive, follow the data, and uncover the real engine that's powering this company. And I think what we find is going to surprise you.
This sentence right here, this is the key to understanding everything. That old label, crypto exchange, it was true once for sure, but today it's the single biggest reason investors, analysts, you name it, get this company so wrong. It's a box that's just way too small for the business they've actually built.
So here's how we're going to do this. First, we'll redefine what Coinbase actually is today. Then we're going to deconstruct the whole business into this powerful three-layer engine. After that, we'll follow the money, see how that engine is actually performing, and figure out how you even begin to value a company like this. And finally, we'll get into the really tough stuff, the core risks, and the big debate that's going to define its future.
Okay, let's kick things off with why that exchange label is just so misleading. Think about it this way. Calling Coinbase an exchange today is kind of like calling Amazon a bookstore. You're not wrong, but you're missing the entire universe of what the company actually does. And this outdated label, it's causing even the smartest folks on Wall Street to use the wrong tools and completely miss the plot.
Here's a much better way to think about it. This is the real definition. It's not just one thing. It's a platform that brings together all these different pieces: brokerage, custody, making money off stablecoins, and even building the fundamental infrastructure for the on-chain world, all under one roof. It's a whole financial ecosystem. And this is a strategic pivot that changes everything. It's a fundamental shift away from just selling trades, which is a really competitive, low-margin business, to owning that entire financial relationship with the customer. That's how you build a durable, long-term company, not just some trading house that swings up and down with every crazy crypto cycle. So, to really wrap our heads around this, we need to break Coinbase down. And the best way to do that, honestly, is to think of the company as three distinct but totally interconnected economic engines. Getting this framework right is absolutely crucial. Now, what's so powerful about this model is how it separates the different ways they make money. You've got that first layer, trading, which is totally tied to market buzz. Then you have the second layer, balance monetization, which is all about earning steadier revenue from the assets just sitting on the platform. And then you have this third layer, the long game, which is about building the financial rails for the whole on-chain economy. Each one has a completely different risk profile, and you have to value each one completely differently.
First up, the layer everyone knows, trading. This is the classic stuff. The consumer app, the institutional desk, it's all about capturing feeds when people buy and sell. It's what built the company, it's what drives their market share, but yeah, it's always going to be sensitive to the crypto cycle. No getting around that.
All right, let's move to layer 2, because this is where the business starts to get really interesting and a lot more durable. This is where Coinbase makes money from the assets you just hold on the platform. So, for example, when you hold the stablecoin USDC, Coinbase earns interest on those cash reserves. Or when you stake your crypto to help secure a network, they take a small piece of the rewards. It's all about creating these recurring revenue streams that are way less dependent on whether the market is up or down today.
And finally, layer 3. This is the big bet. The long-term, high-risk, but potentially massive reward play. Think of their base network, which is like building an express lane for the Ethereum blockchain to make things faster and cheaper. Or think of their payment tools for developers. It's like selling the picks and shovels during the gold rush. This part of the business is their shot at becoming the fundamental toll booth for the entire decentralized economy. It's pure long-term option value.
Okay, so that's the framework. It's a nice story, right? But is it actually happening? Is it showing up in the numbers? Let's dig into the hard data from 2025 and see how this three-layer engine is actually performing in the real world. The headline number? Over $7 billion in total revenue for 2025. That is a massive figure. It just shows you the sheer scale of this thing. But the real story, the proof that this strategy is working, is hidden inside that number.
And there it is, transaction revenue. Yep, it's still the biggest piece of the pie. But look at that, subscription and services now make up nearly 40% of the total. That is a huge shift from where they were just a few years ago. This is the hard data that proves the thesis. This is not just a trading company anymore.
And when we double-click on that subscription bucket, the story gets even clearer. Just look at that stablecoin revenue, over $1.3 billion. This isn't some side business. It's a core profit center, and it's driven by things like USDC balances and interest rates, stuff that has way less to do with whether people are panic selling Bitcoin today. And all of this, it all ties back to one absolutely critical metric: assets on platform, or AOP. At the end of 2025, that number was a staggering $376 billion. Now, just to put that into perspective for you, that's more than the assets held by some pretty major regional banks. This is the fuel for that entire second layer, the balance monetization engine. The more assets they have in the ecosystem, the more shots they have on goal to generate that durable, recurring revenue.
So if it's not just a simple exchange, how in the world are you supposed to value it, right? This is the central question. And just slapping a single, simple multiple on this company is one of the biggest analytical mistakes you can possibly make.
The wrong approach is, well, they're fundamentally flawed because they try to value three completely different economic engines with one blunt instrument. It just doesn't work. The much smarter way to do it is with a sum of the parts mindset, where you value each layer of the business on its own terms, based on its own unique character.
And here's how that works in practice. It's pretty simple, really. You value the trading business like a cyclical broker, with multiples that reflect that up and down volatility. Then you value the subscription and services engine like a more stable financial services firm, which deserves higher, more durable multiples. And the third infrastructure layer? You have to treat that like a venture capital bet, a long-term option that you just can't judge on its current earnings.
Okay, but of course, no deep dive would be complete without a really hard look at the risks. This is not a one-way bet, not by a long shot. And the debate between the bulls and the bears is centered on some very real, very significant challenges.
So let's be clear about these risks. First, the crypto cycle is still a huge factor. A long bear market would still hurt no matter how much recurring revenue they have. Second, those high consumer fees, they're going to come down over time. That's just a reality. Third, stablecoin revenue is great when interest rates are high, but what about when they fall? Fourth, regulation is a total minefield. A wrong step there could be incredibly expensive. Fifth, you have operational risk. I mean, running a crypto platform at this scale is unbelievably complex, and trust is everything. And finally, that exciting infrastructure layer we talked about, that's a very long-term bet. It could take years, maybe even a decade, to really pay off.
Ultimately, the entire investment case, the whole bull versus bear debate, it really boils down to this one question. Is Coinbase successfully making the jump to becoming a true financial platform with durable recurring economics? Or, when you strip it all away, is it just a better, higher quality, more sophisticated way to bet on which way the crypto market is heading? That's the real argument. And now you have the framework to decide for yourself.